Good morning, everyone. Teng Boo from Capital Dynamics again. Today, our topic will be very interesting. It will be very investment related. Don't forget to subscribe. Don't forget to like. And more importantly, don't forget to share. It's very important. Okay, what are we going to talk about? Sell US stocks, buy Chinese stocks. Is the US stock market bearish? Will the rally in the Chinese stock markets continue? The US election is over, right? Trump has been made King of America. So with that, the signs are a lot clearer now. But knowing Trump, he can easily turn everything upside down all over again. That's Trump version 1, Trump version 2, they're all the same. What we're seeing now is Trump version 2 unfolding. It's only been about 5 weeks since he was sworn into office, but I think he's been creating a lot of headlines almost every day in the wrong way. Now, we said about a couple of weeks ago that the US economy is still in an overheated state since 2021. This condition is due to the massive amounts of fiscal stimulus, not just from Joe Biden, but from Trump version 1. They spent trillions and injected trillions into the US economy. A good way to measure whether an economy is overheated or not is look at the output gap of the economy. The chart will show you the output gap of the US economy for the last 25 years. As you can see, in the last couple of years, the output gap of the US economy was way above the potential capacity of the US economy to produce. That's a clear sign that the US economy is overheated. Because of that, the US economic conditions generated very high inflation. Now, before we go into that, before the pandemic and after 2008, the US economy was in an opposite direction. It was producing way below its potential capacity. And that was why US interest rate stayed near zero for a long time. So when Trump version 1 came in, he was lucky. He inherited a US economy that was not fully utilized. Inflation was hardly present, and interest rate could stay low. So he could do a lot of funny things, and the US market went up. Then came the 2020 pandemic. As we all know, both Trump version 1 and Joe Biden, both of them panicked and throw in literally trillions of dollars into the US economy. The US economy responded logically and produced way above its capacity, which was why you have the global supply disruption. The supply chain disruption in 2020, 2021, 2022 was not just due to the COVID, was not just due to all kinds of disruptions in Europe, in China, but also because the demand from the US economy went crazy. By all accounts, now we're in February 2025. The US economy is still in an overheated condition. The output gap is still way above its potential capacity. And more importantly, you look at inflation figures in the United States. In the recent months, whether it's headline inflation or core inflation figure, both inflation numbers have been climbing up. They've been rising. By January this year, that's before Trump imposed his crazy tariffs, US inflation for January 2025 was already coming back, both headline level and at the core level. It's not just the CPI, it's also the producer price inflation and so on and so forth. Besides the fact that Trump relies on tariffs to achieve his ultimate aim of restoring white supremacy, he is being advised by economic illiterates like Peter Navarro. And Trump's cabinet version 2 is filled with billionaires, people who benefit from rising cost of living, while millions of ordinary Americans suffer. Trump's tariff policy version 2 has been very confusing. It is intentionally confusing. It is intentionally done by Trump to confuse his targeted countries and enemies, to confuse them. But what Trump does not realize is that by implementing such a confusing tariff policy, he is in the process also confusing the US consumers, US businesses, and the US financial markets, because they can't make sense of what actually is happening. Today he'll say this, in the morning, in the afternoon he'll say something else. And then he'll pretend, oh, maybe it's genuine, I do not know. Oh, then he'll say, oh, did I say that? Did I say that? It's interesting to analyze his behavior. Now, when you have such a confusing tariff policy in a condition where the US economy is overheated, where the US stock market is overvalued, where inflation is rising again, and you are worrying across all segments of the US economy and society, something drastic is going to happen. Something drastic in a negative way will happen. You can see this from the US bond market. There is already a new signal, a new sign. The US 10-year Treasury yield has fallen below the yield on the 3-month US Treasury bill. When that happens, it creates an inverted yield curve. An inverted yield curve is one of the most reliable recession indicators. It's not 100%, but it is damn reliable. Now, you may say that the last yield inversion started in October 2022. And in the last 2 odd years, there's been no US recession. Agreed. No dispute about that. But you are trading in an unusual set of circumstances. So I don't want, in my other talks, in my other writings, I said that don't make a hasty conclusion yet. So now that Trump is in, you know his tariff policies, you know his immigration policy, you know how he's going to reduce bureaucracy in US and make the US government more efficient. And then you have the US yield curve inverting again. I think we should pay attention to this very classic and reliable indicator.
Are you tired of doing investment research on stock markets? Want to spend time on your hobbies or go out with your friends instead? Introducing iCapital, where you can get independent, objective, and comprehensive investment advice on the go. Available in English and Mandarin and can be accessed via app, website, and print copy. We provide thorough, first-hand research-based findings on listed companies, economies, and stock markets, and clear perspective of how markets interact and how they influence investments, as well as provide Malaysian and global stock recommendations, stock portfolios with outstanding performance to follow. Subscribe now to iCapital for stock news. From only 49 ringgit a year, start investing like a fund manager. Subscribe now at www.icapital.biz.
So, in 2022, the inversion was for a different reason. Now it's inverting for a different reason. If you look at the S&P 500, based on technical analysis. Now, many of you may be wondering, why am I talking about technical analysis? I have been using charts and technical indicators since the 1970s. I was also a fundamental value investor in the 1970s. So I'm familiar with either methodology. If you look at the S&P 500, the weekly MACD is diverging bearishly. That means the MACD is not making new highs, while the S&P 500 index is making new highs. That is a bearish divergence, and that has always been a bearish prediction. At the same time, the S&P 500 index cannot rise above its upper channel resistance, while the MACD is giving you bearish signs. Now that is deeply worrying. But it's not just the S&P 500. If you look at the Nasdaq Composite, the same thing is being displayed. In fact, the Nasdaq Composite has got an additional bearish indicator. That is the demand index. It means that when the demand index is diverging bearishly with the Nasdaq Composite, what that means is that even though the Nasdaq Composite is making new highs, the volume, the number of buyers is reducing. That is also deeply worrying. Then, for those of you who are in semiconductor stocks, AI-related stocks, and so on and so forth, the SOX index, this is a well-known semiconductor index, is also showing a bearish sign. If you look at the monthly MACD, it has turned clearly and decisively bearish. The last time the SOX index showed a bearish monthly MACD was in 2022. In that 1 year, the SOX index plunged 50%. So can you imagine if the same thing was to repeat? Well, let's look further. Let's look at some of the big techs. Mike has enjoyed the AI hype. The technical indicators for Microsoft are also worryingly bearish. Not only is the monthly MACD of Microsoft bearish, it is also diverging bearishly. So double bearishness. And you look at Nvidia, it's the same chart. This is the same weekly chart that I showed in my YouTube video last year, where I talk about, where I advise our viewers to sell Nvidia. You know, since then, Nvidia's share price hasn't gone up. In fact, it has been moving sideways. So what has happened since then? If you look at the chart of Nvidia, it is still struggling within the same channel lines. It is still struggling at that upper part, the resistance level, while the weekly MACD continues to become bearish. So the same bearish signal that was there last year still persists. And if you take a look at, at the monthly indicator for Nvidia, it is not bearish yet, but it has already started to turn. It is beginning to move in the bearish direction. Now all this are worrying for Nvidia because they just announced their latest quarterly results, which was strong, but the share price went down. If you look at what I said last year, which was 3rd of August 2024, I showed some figures at that time where I said that if you look at it, not just from the charts and technical indicators, but look at it from a fundamental point of view, that if you do extrapolation of Nvidia's earnings and revenue, they don't make sense, right? Because mathematically, it's impossible for it to happen. In fact, when we showed the simple extrapolation last year, you could get to a set of figures where gross profit of Nvidia will be larger than the revenue of Nvidia a few years ahead. Look, Jensen Huang cannot do that. Jensen Huang cannot be a magician to that extent. So what we do now is use the latest quarterly results and do another simple mental exercise, simple arithmetic exercise. Let's say that, you know, the revenue from its data center operations have been growing rapidly since first quarter 2024, right? Let's say you continue that rate of growth from first quarter 2024 to fourth quarter 2025 for the next 2 years. That means up to 2027, right? The revenue of Nvidia will be about of the data center business will be about $285 billion. Possible, achievable. Now you do another projection, another 2-year projection from 2027, another 2 years, based on the same rate of growth. The revenue from Nvidia's data center business will be, guess what? $2.28 trillion US. Trillion. 2.28. That is about 50% larger than the entire Australian economy. I don't know. It may happen, but I just use common sense, right? I'm not an AI expert. I'm not a semiconductor expert. I'm not an expert. I'm just a commonsensical investor that is based on a lot of common sense. So 2.28 trillion in about 3-4 years time, unlikely. Possible, but very, very unlikely, right? So, is that crazy? But wait till you see Nvidia's gross profit. I would like to repeat what I said in August 2024, right? Where, based on those numbers that I did in August, by 2027, Nvidia's gross profit will be larger than Nvidia's revenue. Impossible, right? So let me use the latest fourth quarter 2025 figures and do some simple mental exercises. Assuming that the total revenue, not just the data center, the total revenue and the total gross profit of Nvidia will continue over the next 1, 2, 3 years, you'll find that by financial year 2027, Nvidia's revenue will be about $718 billion US. The gross profit will be about $605 billion. That implies a gross profit margin of 85%. I mean, technically it's possible. Logically, it is unlikely to happen. Take a step further to FY financial year 2029. Then you find that the gross profit of Nvidia will be almost equal to the revenue of Nvidia, with a profit margin of about 95%. Look, I'm not as smart as Jensen Huang. I'm not as smart as all those people in Silicon Valley and Wall Street. But I just think that my common sense tells me that I better stick to my common sense. Even Donald Trump cannot make America that great. So conclusion, what we have now is very simple. US stock markets are highly overvalued and showing major bearish reversals. The same goes for the major US stocks like Nvidia, Microsoft, Dell Computer, and so on. At the same time, US inflation has remained stubbornly high. And with Trump now throwing his tariff tantrums all over the world, US inflation most likely will be rising again. I don't like that combination, right? And at the same time, the US recession indicator is flashing red again. So how? What does it mean? What does it mean for your investment strategy? Very simple. Sell US stocks, buy Chinese stocks. Why China? If you want more insights, we're having a 2025 fund gathering on 15th of March 2025 in KL. Physical event. If you are an investor in any of our unit trust funds, you are eligible to attend and bring along 2 of your friends. If not, just invest in any of our unit trust funds and you'll be qualified to attend. If you have the chance, please come and see us, where we'll share with you in greater details. But meanwhile, any rebound in US stocks is an opportunity for you to sell and reduce your exposure to US stocks. Any dip, any correction in Chinese stock is an opportunity for you to invest in Chinese stocks if you haven't. So I hope you enjoy this short update, and share. Please share and subscribe to our YouTube channel. Have a good weekend ahead and stay calm. Bye-bye.